It is 8:08 a.m. Pacific Daylight Time. It's the 6th day of April 2026. This is episode 1293 of Bitcoin, and with all the Bitcoin news you can use and macro from around the world with me, your host, David Bennett. First thing up, Justice Department request to revive these Federal Reserve subpoenas on Jerome Powell has failed. Judge has said no. Yeah, that's going to be what starts us out this morning. And then Charles Schwab direct Bitcoin trading with Schwab crypto. So average Joe on the street, retail. This is Charles Schwab. This is retail. This isn't institutional. This isn't like, for like high net worth individuals. No. Retail all over the street. Charles Schwab's one of the largest brokerage houses for retail that there is. China doesn't like BitChat. We will tell you all about it. And then Samson Moe brings in his viewpoint on a quantum fix for Bitcoin. But more interestingly, there's this company named MicroCloud Hologram, and they're throwing their hat in the ring. And I smell 2018 shitcoiners all over the place on this one. The IMF is going to start out the second part of the show. They're wetting their diapers again about tokenization. They're beating the drum. IMF is almost entirely now focused on tokenization rather than Bitcoin. This is actually good for Bitcoin because at least it takes the IMF's attention away. And then, of course, we're going to have to talk a little bit about the Iran war. But as it pertains to prediction markets and real-time macro signals, that we could start seeing prediction markets act more as a oracle than it has been. And then, of course, Michael Saylor adds a lot more Bitcoin. And then Claude Code and FreeBSD. There's an interesting story there. And then we're learning a little bit more about this drift protocol thing. So as usual, I will put it at the very end of the show as a warning not to get involved in DeFi and all the rest of this worthless garbage. But right now, judge denies Justice Department request to revive Federal Reserve subpoenas. This is out of CBS News. A federal judge on Friday rejected efforts by the Justice Department to revive two subpoenas that it served to the Federal Reserve as part of its criminal investigation into Chairman Jerome Powell and the Federal Reserve's building renovations after the judge had quashed them on the grounds that they were pretextual and not based on evidence of a crime. Quote, "The government's arguments do not come close to convincing the court that a different outcome is warranted," wrote Chief Judge for the District of Columbia, James Boasberg. In January, Powell revealed that the Federal Reserve had received grand jury subpoenas from the Justice Department as part of an ongoing criminal investigation into him, Jerome Powell. And the subpoenas threatened a criminal indictment related to Powell's testimony before the Senate Banking Committee June 2025, according to Jerome Powell. The chairman, who has drawn President Trump's ire for declining to rapidly slash interest rates, said that the probe centered on his comments about a years-long renovation project at the Federal Reserve's office buildings. The investigation has not resulted in any criminal charges. In sealed proceedings, lawyers for the Federal Reserve asked Boasberg to quash them. Boasberg granted the request and unsealed his decision last month, prompting U.S. Attorney Jeanine Pirro to accuse him of being an activist judge, whose decision was untethered to the law. The government is both appealing the ruling and filed a separate motion asking Boasberg to reconsider his decision. Yeah, this U.S. attorney, Jeanine Pirro, to accuse a federal judge of being an activist judge and his decision being untethered to the law is kind of a dicey gamble for a U.S. attorney. It really is. It's like you're kind of going up right against a judge. But more importantly, this judge has said no. No, we're not going to drag Jerome Powell up here into court. You guys are done. And so I kind of expect that this is probably the end of it. We'll see, but I don't think that the Justice Department is going to be able to do very much more with Jerome Powell. And that just kind of speaks to how Jerome Powell he's sticky. He's going to be sticking around a lot longer than Trump wants, I think. And I'm not certain that the Federal Reserve is in any position right now to do anything other than either keep Federal Reserve lending rates the same or possibly raise them. And the chances of a raise is not becoming, it's becoming more likely insofar as if you're looking at Kalshi or Polymarket or something like that. It is becoming more likely, but right now it's actually the most likely that Federal Reserve rates will stay exactly the same. That could change, but Jerome Powell himself, he ain't going nowhere. And then we're on to Charles Schwab. They tease direct Bitcoin trading with a new, quote, Schwab crypto account. Micah Zimmerman writing this one for Bitcoin Magazine. Financial services giant Charles Schwab is preparing to expand even deeper into digital assets, announcing plans for a forthcoming product that will allow clients to buy and sell cryptocurrencies directly through its platform. The firm revealed that Schwab Crypto, and it's got a little trademark symbol there, is in development and will be offered through Charles Schwab Premier Bank, positioning the product as a gateway for retail investors seeking direct exposure to leading cryptocurrencies such as Bitcoin. The company is open to wait list for clients interested in early access, though availability will be subject to regulatory approval and eligibility requirements. The move marks a notable shift for Charles Schwab, which until now has limited crypto exposure to indirect investment vehicles. Currently, clients can access digital asset markets through exchange-traded products, crypto-related equities, and thematic funds. Examples include publicly traded firms like Coinbase, MicroStrategy, and Riot Platforms, as well as funds tied to blockchain and crypto industry performance. Schwab's entry into spot trading, which this is, places it in a more direct competition with established crypto platforms like Coinbase, Robinhood, and Webull. CEO Rick Wurster first signaled the firm's intent to enter spot crypto markets in late 2024, citing expectations for a shifting regulatory environment under the administration of Donald Trump. The company has since positioned itself to move once conditions allow for broader participation by traditional financial institutions. Schwab is also preparing additional crypto-related products, including a potential stablecoin offering. Oh, yay! Following the passage of the Genius stablecoin bill. In a recent report from Charles Schwab, it found that Bitcoin volatility has actually declined significantly, with historical volatility falling from 42% in 2025, which is about half of its 2021 level, making it comparable or lower than major tech stocks like Tesla and even Nvidia. Despite fewer extreme swings, Bitcoin still experiences sharp drawdowns. Yeah, I don't think we need to worry. I think we know, dude. Long term, however, volatility remains slightly elevated versus traditional assets. The report suggests that Bitcoin is maturing as it integrates into mainstream finance, with growing institutional adoption and ETF developments signaling increased acceptance. So Charles Schwab they're huge. I mean, you can say what you want about them, because a lot of people have, kind of like, oh, it's a poor man's brokerage house. Yeah, well, that's retail, dude. Everybody in retail's broke as a broke dick dog right now. I mean, nobody's got any money. However, Charles Schwab is still representative of hundreds of thousands, if not, well, actually it's more like millions of customers. And they're going to all have direct exposure to being able to buy spot Bitcoin. not getting indirect exposure like through buying an ETF or buying like, Coinbase, which is just only indirectly exposed to Bitcoin. No, they're going to be able to buy and hold Bitcoin directly inside their Charles Schwab accounts. So it's kind of a big move there, and I'm not really seeing a whole lot about it on the wires. All right, so Jack Dorsey, this over the weekend, actually I think it was last night, tweeted out that BitChat has been removed from China's App Store, from the Apple Store the Apple App Store in China. The headline here from Decrypt: China orders Jack Dorsey's BitChat pulled from Apple App Store. Now, Apple has removed BitChat. BitChat is the decentralized messaging app that was created by Block CEO Jack Dorsey, and it removed it from its China App Store at the request of Beijing's internet regulator, according to a Sunday tweet by Dorsey. The Cyberspace Administration of China argued the peer-to-peer messaging app violated regulations governing, quote, internet-based information services with attributes of public opinions capable of social mobilization. Let's pause just for a second. Let's read that again. This app, BitChat, violates regulations governing internet-based information services with an attribute of public opinions capable of social mobilization. That means you can organize a protest. And China's like, no. That's about as authoritarian as it gets, dude. It's a provision under 2018 regulations that require security assessments before launch. Unlike traditional messaging apps, BitChat operates entirely over Bluetooth and mesh networks without requiring internet connectivity. It's a design that poses unique challenges to China's digital surveillance infrastructure. The timing underscores BitChat's rising global profile. The app has reached more than 3 million total downloads across platforms and over 83,000 downloads in just the past week alone. Its Apple test flight version has reportedly reached its 10,000 user limit before the Chinese removal, while the Google Play Store version has registered more than 1 million downloads separately. BitChat has become a tool of choice during recent protests in Madagascar, Uganda, Iran, Nepal, and Indonesia, where authorities have attempted to restrict internet access. Its mesh networking technology allows messages to hop between devices without centralized servers nor internet infrastructure, making it particularly valuable during government-imposed connectivity blackouts. The removal reflects Beijing's broader strategy of maintaining control over digital communications. And China's dominant messaging platform WeChat serves 1.34 billion monthly active users out of a national population of more than 1.4 billion. That's almost every single person in China. They are all operating under strict government oversight and content moderation requirements that BitChat's architecture explicitly avoids. This marks the second time Chinese authorities have targeted a Dorsey-backed decentralization application. In 2023, China banned Damus, a decentralized Twitter alternative built on the Nostr protocol that Dorsey has championed, citing similar concerns about unmonitored communication channels. Let's clear that up a little bit. When a Dorsey-backed decentralization application, then they say that they ban Damus. Let's just be clear. That's JB55 on Damus. He is the guy that built Damus, and this is the Nostr this is the Nostr client that I use on my phone all the time. I love Damus. I have never needed to try anything else because Damus does everything that I want. But it's Dorsey. The way that the story is written, I just want to make sure everybody knows Dorsey didn't make Damus. He did build BitChat. And from what I understand, he built it himself in a vibe coding session over a weekend. And now China has basically said no. And so, and this is what's particularly bad about the Apple ecosystem is it's not just that they pulled it from the App Store. If the Apple App Store works in China the way it works in the United States, it's off of everybody's iPhone in China. It's been pulled. They can't use it anymore. If there's anybody in China, for whatever reason, that's listening to this show, please get a hold of me on Nostr and let me know if you still have access to BitChat on your Apple iPhone or if it just auto magically disappeared itself. Because this kind of thing, this is what the Human Rights Foundation, the HRF, this is the kind of thing that they fight for. They fight for people being able to use apps and digital communications and all kinds of stuff to be able to organize protest, organize themselves, basically have a second line of communication between themselves that is not dependent on authoritarian regimes. So go check out Human Rights Foundation. They do really good work. And another guy that does really good work, and I only get to bring MapleTrade around in the spring, and now it's spring. MapleTrade is back in action with his handmade maple syrup, and he does it the old-fashioned way. He actually does it over, he boils the maple sap over like open wood-fired evaporators out in the open, the way that it was meant to be done. I've had his maple syrup. It is some of the best maple syrup that I've ever had. I wish it was in stores all the time, but he's a small guy. You know, he's got like a lot of maple trees around him, but he's got to tap them all himself with his family. He's got to boil all it down. He's got to package it. He's got to put labels on it, and then he's got to mail it. Right. So he is part of the Circle P. The Circle P is open for business. It's where I bring plebs just like you with goods and services to plebs just like you who want to buy those goods and services. But you will be buying it in Bitcoin, because if you're not selling it in Bitcoin, you're not in the Circle P. And MapleTrade certainly is in the Circle P. You can get his maple syrup. Shipping is included in price for 47,144 sats. You will find the link to his takemysats.com storefront in the show notes. Right? It's right there. It's like it'll takemysats.com /MapleTrade maple syrup. Okay. Just look for the link in the show notes. Indulge in the pure, rich taste of nature with his artisanal handmade maple syrup. It is handmade. It's crafted from the finest maple trees. Each bottle is a sweet testament to tradition and quality, perfect for pancakes, waffles, or that special recipe needing a touch of sweet complexity. I like using a little bit of it in barbecue sauce. Just saying. Elevate your meals with the drizzle of our Amber Delight. Order now and taste the difference true craftsmanship makes. Make sure you tell them that you heard about them here on the Bitcoin and Podcasts, Circle P. Use code Bitcoin and. Use code Bitcoin and. That will tell MapleTrade that you did hear about it here on the Bitcoin and Podcast, and he will catch me on the other side with some Satoshis, because that's the way the Circle P works. There's no contracts. There's no billing. If I make a sale for one of my Circle P vendors and you guys use the code Bitcoin and, they can figure out how much that sale was worth to them, and then they send me sats directly as payment for featuring them here in the Circle P. That's the way it works. Remember, MapleTrade's storefront URL is in the show notes. Just click on it and use Bitcoin and as the promo code. Rushed quantum fix may backfire for Bitcoin, Samson Moe warns. And this is out of Cointelegraph. Rushed quantum fixes for Bitcoin could introduce new risks, Samson Moe warned in his response to calls from Coinbase executives for faster action. Moe, a Bitcoin advocate and Jan 3 founder, took to X on Saturday to address comments from Coinbase CEO Brian Armstrong and Chief Security Officer Philip Martin, who urged the industry to begin preparing for quantum computing threats sooner rather than later. He said that while post-quantum cryptography could secure Bitcoin against future quantum computing attacks, rushing implementations may create brand new vulnerabilities such as compatibility issues and reduced network efficiency due to larger signature sizes. Quote, simply put, make Bitcoin safe against quantum computers just to get owned by normal computers, Mo said, adding that a poorly timed transition could weaken Bitcoin against today's threats before actually addressing future threats. The exchange reflects this growing debate over how to future-proof Bitcoin, as new research from Google and Caltech reignited concerns about progress in quantum computing. One of Mo's biggest concerns about rushing a quantum fix for Bitcoin is the potential impact on performance, particularly in block size or the amount of transaction data that can fit into a single block. Quote, post-quantum signatures will likely be 10 to 125 times larger than current ones and massively reduce throughput, Mo said, citing former Bitcoin developer Jonas Schnelly. Let's take a breath on that. Post-quantum signatures will likely be 10 times to 125 times larger than current ones. Why is that important? Because your signature goes along for the ride in every transaction, and that signature constitutes data in kilobytes, like real data that has to be embedded inside that transaction. And right now, I'm paying, like, I did a Bitcoin transaction last night for like 3 sats per VByte. And that's on a single SIG wallet. If I have to pay 3 sats per VByte, and I think it ended up being something like 32 cents. If I increase that by 10 to 125 times, it's not exactly a linear relationship to the price. So it's not exactly like multiplying, 32 cents by 10, which would be like $3. But it is going to become way more expensive. And I just want to caution everybody here by saying, or for those people that say to themselves, well, we'll just use these post-quantum multi-sig wallets and with all these signatures and everything's going to be fine. No, because there's always a drawback when it comes to any kind of protocol changes in Bitcoin. And Samson is illustrating one of the chief components of a transaction here becoming way, way larger. Now, is it really 10 to 125x? I don't know, especially about the top number. 125 times seems a little big to me, but 10x, I can see that. And I don't need a $3 transaction at 2 or 3 sats per VByte. I really don't. Not on especially on a single sig. So just, be aware that everything has a drawback. Now, the signature issue could potentially pave the way for block size wars 2.0, Mo continued. And nobody wants this, guys. Bitcoin's block size wars began around 2015 and peaked in 2017 when the community split over whether to increase the block size to handle more transactions. That dispute raised concerns about decentralization, network security, and who controls Bitcoin's future, ultimately leading to alternative scaling solutions rather than a simple increase in block size. Despite arguing against rushing a transaction or a transition to post-quantum cryptography for Bitcoin, Mo said work on potential solutions absolutely should continue. Quote, given that quantum computers don't actually exist yet and likely won't exist for another 10 to 20 years, the worst possible course of action is to rush in a fix. That's not to say that the work shouldn't be done to prepare, and there is already much work being done, end quote. And that is a sentiment that I've said over and over and over again. The quantum threat to Bitcoin was acknowledged years ago by Bitcoin Core and satellite Bitcoin developers. It's not like this crept up on them last week, or the month before, or even last year. This is a well-known issue. They've been thinking about this and theorizing about this, and with they basically being Bitcoin developers have been thinking about this for freaking years, right? In fact, when I first got into Bitcoin, which was 2015, it was the end of it was at the very end of the summer of 2015. And I was working at Texas Tech University. I was working up in the library, and we were part of the library's technology core services, which involved IT and a whole bunch of ancillary services that were built around computers and servers and licensing and software and all kinds of neat stuff. So my boss goes, well, what about quantum? And I go, well, what about quantum? He's like, well, if quantum computers comes up, won't that break the cryptography of Bitcoin? And I bring that up simply to say, even people outside of the Bitcoin ecosystem, because he wasn't a Bitcoiner. He knew I was into it, but he himself didn't really mess around with it. He was close to retirement at that time anyway. So he really kind of didn't need to, right? But even this guy who he was a very good software developer himself, so he knew all kinds of shit about cryptography and how the web works and all kinds of neat stuff. So he definitely had a leg to stand on. And even he's sitting there going, look, man, this quantum thing is a thing. And this was 2015 to 2016. If this guy who's not even a Bitcoiner gets it at that point in 2015 and 2016, and you don't think that core Bitcoin developers weren't thinking about it at that exact same time, you got to be fooling yourself. Of course they were. Of course they were thinking about it in 2015, 2016, right? This is not a surprise. What all this quantum shit is FUD, and it opens the door to scammers. Scammers like MicroCloud Hologram. They made a press release this morning that they're going to invest $400 million to save Bitcoin. And I don't even know who's on the governance board for this company. I can't find their board of directors. I literally cannot find anything out about this company other than their core technology is holographic technology. And somehow or another, it's going to save Bitcoin. So here's just a few snippets from what I heard earlier today. This is the kind of shit that quantum FUD is opening up for us. MicroCloud Hologram said on Monday that it had planned to invest $400 million to develop quantum-resistant upgrades for the Bitcoin protocol. The company is aimed to build a hybrid cryptographic framework combining ECDSA with post-quantum signature algorithms enabling gradual network transition. Pausing right there to say, no, it doesn't work that way. This is complete and utter bullshit, and yet it is in mainstream news this morning. Further, the protocol has been designed to remain compatible with the existing Bitcoin ecosystem with a soft fork upgrade path to avoid disruption. The initiative has included support for multiple post-quantum algorithms like Crystal's dilithium and Sphinx Plus, and a modular architecture for flexibility, which is gobbledygook for we want to steal your money. The company had proposed performance optimizations, including signature aggregation and hardware acceleration, to address scalability concerns. The rollout had been expected to follow a phased approach from testnet validation to full mainnet implementation, but the company held over $390 million in cash reserves, positioning it to fund its quantum security and blockchain initiatives. Its shares, HOLO, fell 2.94%. I cannot find who's on the board of directors for this company. They've even got a page for it on their website, which is clean and neat and filled with spicy holographic looking pictures of people in front of like displays that are, see-through displays like you see in science fiction. And it smells a lot like, what was it? Oh, yes. All the shit coins that rained down on us after 2017, Now, there was quite a few before that, but it was nothing like the post-2017 Bitcoin Cash split, where everything, I mean, every day there was a new blockchain being released, and they'd release pictures of their board of directors or their C-suite executives. And come to find out that 80% of these companies, the pictures that they were putting up for their, quote, governance boards were fake pictures. They just pulled them from the internet, put a circle around it, cropped everything else out, and then put some bogus name underneath it and said, Chief Operations Officer. This smells and looks exactly like that. So please, for the love of God, do not fall for this, and don't fall for anything like this. Microcloud hologram is a non-starter. $400 million they're going to invest, but they're only sitting on $390 million in cash? Yeah, I don't think so. Let's run the numbers. CNBC Futures and Commodities, where West Texas Intermediate is still beating out Brent North Sea by price. I still don't get this one, but whatever. Brent North Sea crude up 0.5 point to $109.58 a barrel. West Texas Intermediate $112.19 a barrel after a 0.5 point rise of its own. Natural gas up just flipped over 1%, $2.82 per thousand cubic feet. Gasoline sideways at $3.28 a gallon. Merbon crude up 2.6% to $117.93 a barrel. Metals are mixed, mostly in the red today. Palladium down over a point. Gold is up 1/3 of a point to $4,694.03. Platinum down 1/4. Silver is down 2/3 to $72.47, and copper is moving sideways itself. Ag is mixed today. Biggest winner is cotton. 1% to the upside. Biggest loser is lumber, 2 points to the downside. Live cattle up 0.07%. Lean hogs up almost 1/2, and feeder cattle down 1/3. And Bitcoin chilling out at $69,710. That is a $1.4 trillion market cap. And we can now purchase 15 ounces of our favorite shiny metal rock with our one Bitcoin, of which there are 20,012,060.53 of. And average fees per block are low at 0.01 BTC in fees on a per block basis. There are, 22 blocks carrying 19,000 unconfirmed transactions waiting to clear at high priority rates of 2 sats per VByte. Low priorities get you in at 0.3. And hash rate has fallen a little bit again. 958 exahashes per second is the hash rate of the Bitcoin network. It's more security than I would ever need, honestly. And from Drifting, which was Friday's episode of Bitcoin, and I've got Jay with, 10,500 sats. Thank you, sir. No, Jay, thank you. Oak Grove with 2,500 sats says, 1. Solana is the only organization that is open because their code is a very leaky bucket. 2. Tallow skin products? Heck, hell, fuck, yeah. Number 3. Why? Because fuck you, that's why. Reverend Hoddle with 1,121 sats says, Bitcoin and has the news that you can use. Hashtag 40HPW. Thank you, sir. No, thank you. Jason High with 250 says, just left a 5-star review on Apple Podcast, even though I listen on Fountain. Thank you, Jason. It's very, very much appreciated. Yeah. I hope you have some idea at what that does to the worldwide algorithms, because it's not just Apple, right? You give me a 5-star review on Apple Podcast. This isn't just about having a 5-star review on Apple Podcasts. There's a lot of third-party search algorithms for podcast and music and all kinds of stuff that actually pull from Apple Podcasts and looks at reviews as to what to surface in their own app. that's why the Apple Podcast review is actually important. It's not just because I'm a diehard Apple Podcast fan. I haven't used Apple Podcasts as a podcast player on my phone in freaking years. Once I found Fountain, and I was using, like, not Overwatch. I can't remember the name of the podcast app that I used to use. It was Overstream or something like that. And before that, I was using Apple Podcasts. But the minute that I found Fountain, I was like, oh, hell, Fountain.fm. If you want a spiffy new podcasting 2.0 player, go get Fountain.fm. That's Fountain.fm. And it will have a link directly to the Apple App Store or the Google Play Store so that you can get it on your phone. It's the only one that I use now. I love it. It's got a couple of little hiccups, and it's got a couple of little UI things that I think should be adjusted. But dude, it's like a 2-man show over at Fountain.fm, and they have absolutely nailed almost all of the podcasting 2.0 features, which I like, stuff like chapters and transcripts and being able to stream sats and boosting with sats and being able to leave messages and integrating with the Nostr protocol. Fountain they're so good. It's such a good app. So I understand, Jason, and I appreciate the 5-star review, but I guarantee you it does a hell of a lot more for me than most people realize, because Apple is one of the repositories for, quote, quality that a shit ton of other platforms look to as to what they're going to surface in their own app. And the more 5-star reviews I can get, the more I get surfaced. And that ends up being really important when you're competing against 4 million podcasts, 500,000 of which are updated either weekly, daily, or monthly, updated insofar as a new episode gets returned. But even in a field of 500,000 shows, I'm still in the top 0.7 percentile. And that's because of you guys. That's because of people like Jason High, who left me a 5-star review. Thank you so much. Nick Dose with 184 says, cheers. Pies with 121 says, thank you, sir. No, thank you. Oak Grove with 100 says, all durable your nonces. And that's the weather report. Welcome to part 2 of the news that you can use, where the IMF warns that tokenization could bring crypto risks into global financial markets. Francisco Rodriguez gives us the continuing saga of wet diapers and the International Monetary Fund from CoinDesk. Tokenization, the representation of real-life assets on a blockchain, could reshape both crypto markets and traditional finance while introducing new risks that regulators are not yet equipped to manage, according to the International Monetary Fund. In a brand spanking new report written on the ass end of a pair of wet diapers, the IMF described tokenization as more of a technical upgrade to markets. And by moving assets like money and bonds and funds onto shared blockchains, transactions can settle instantly, cutting out intermediaries and reducing delays that defines today's markets. The IMF says that the atomic settlement that tokenization brings to the financial world could lower counterparty risk and force firms to manage liquidity in real time. Quote, stress events are likely to unfold faster, leaving less time for discretionary intervention, the report reads. Quote, therefore, ensuring stability requires that tokenized asset management remains anchored in self-settlement assets, legally recognized finality, and robust governance arrangements. Oh my God. Let's pause. Stress events are likely to unfold faster, leaving less time for discretionary intervention. It means that they don't have circuit breakers. And the intermediaries are cut out. They can't get their cut of money. Oh my God, it's a total annihilation. It's a complete collapse. Oh, for the love of God, the report points to stablecoins as a key bridge between crypto and traditional finance. These could become widely used settlement assets across tokenized platforms. Still, their reliability depends on reserves and redemption systems, leaving them exposed to runs under stress, the report said. The IMF also warned that faster, automated markets could amplify volatility, while smart contracts that trigger margin calls or liquidations may accelerate sell-offs during downturns. Such rapid declines have been seen in crypto markets. Tokenized assets can also move instantly across jurisdictions. Yeah, they really don't like this one. Complicating oversight and raising concerns about capital flight and currency substitution in emerging markets, the IMF wrote. The organization called for clearer legal frameworks and stronger global coordination, arguing that without them, tokenized finance could deepen fragmentation rather than improve efficiency. And tokenization has been a growing theme in the crypto sector. Real-world assets added to blockchain rails have already topped $23.2 billion, according to DeFi Llama. Excluding stablecoins, the majority of that figure is in the form of tokenized gold or money market funds. So the IMF sounding the alarm one more time. And this is like the third time that they've talked about actually this is like the fourth or fifth time in a row that the IMF has been crying their eyes out about tokenization of real world assets, and the ones that are the most dangerous to them isn't bananas on the blockchain, it's shares of like Exxon, it's like equities and derivatives and futures contracts and all this. That's what they're afraid of. They're not worried about grapes on the blockchain. That's all bullshit anyway. But this stuff, equities, yeah, totally built for it. And I haven't heard them breathe a word about Bitcoin for this entire time. It's almost like the entire first quarter of this year, the IMF hasn't breathed or spoken or thought the word Bitcoin. And honestly, it's so nice to let them rally against something else. This is the ablative armor that I keep talking about. As long as their attention is distracted to other things, they don't have time to worry about Bitcoin. And that's going to be important for Bitcoin. It already has been important for years. It will remain important for a very long time into the future, unless we all get blowed up with the Iran war. Because the Iran war bets turned prediction markets into real-time macro radar, according to Signum. This is Cointelegraph. Prediction markets rapidly repriced the odds of U.S. escalation in the Iran conflict, offering a real-time signal of geopolitical risk for traders. Odds on platforms such as Polymarket and Kalshi shifted in real time as President Donald Trump paired new threats with signals of possible negotiations on Sunday, while Bitcoin rose more than 3.5% on Monday. Crypto prediction markets are no longer just a sideshow during periods of geopolitical tension, with professional desks increasingly using them to gauge macro risk, according to Signum Bank Chief Investment Officer Fabian Dorey. Quote, prediction markets price discrete, named outcomes with real capital behind them. For crypto in particular, where so much price action is driven by specific binary events, regulatory decisions, geopolitical developments, and protocol upgrades, that is a categorically different signal, Dorey told Cointelegraph. Throughout the Iran conflict escalation, prediction market odds on de-escalation shifted before mainstream financial media coverage caught up and had direct correlation with Bitcoin price, Dorey added. On some professional desks, prediction markets are now used as a real-time event monitor during fast-moving geopolitical situations alongside funding rates, options, surfaces, and flows, Dorey said. ARK Invest, integrating Kalshi's prediction market data into its own investment process, shows how event odds are migrating into mainstream institutional workflows. In a regulated environment, prediction markets function as a context layer, informing how teams frame risk scenarios rather than serving as direct buy or sell signals. The goal is to decide what to do before that event happens, he said, arguing that markets that continuously update a capital-weighted probability of war, sanctions, or ceasefire are a natural fit for that discipline. The flows are now large enough that institutional investors can no longer dismiss the signal as retail noise. In March, the number of prediction market transactions reached about 191 million. That's up 2,838% year over year, with monthly notional volume rising to roughly $23.9 billion. And at the same time, traditional exchange operators are moving in. Intercontinental Exchange, the parent of New York Stock Exchange, completed a new $600 million investment in Polymarket on March 27th, deepening its conviction in prediction markets. Quote, "This is no longer a niche product," Dorsey said, adding that the real question for professional investors is no longer whether to watch Iran-linked markets at all, but how to integrate them in a way that adds genuine analytical value rather than simply adding a new source of noise. The boom is also drawing tougher questions about fairness and integrity. 6 Polymarket traders netted around $1 million betting on the timing of U.S. strikes on Iran in late February, sparking insider trading concerns. The platform also pulled a market on a missing U.S. pilot on Saturday after backlash over related wagers. They got a couple of spelling errors in this sentence that made it very difficult to read. All right, so here's the thing. Maybe, again, I'm going to say it again, maybe I was completely wrong about Polymarket and Kalshi not being a source of quote-unquote truth. And I made this admission last week, and I'm going to make it again this week. As more and more people pile into using Kalshi and Polymarket, more and more of those people are going to have better intelligence than others. And as the numbers of users rise, I think that the amount of noise, the signal to noise ratio actually increases insofar that you get more signal over noise rather than more noise over signal. But let's just say that I'm butt ass wrong, and we'll just leave it at that. Yes, these things surface an amount of truth. When Bloomberg terminal, and what I mean by that is Polymarket and Kalshi already present on Bloomberg terminals? That's going to be interesting, because it's hinted at here. They were talking about ARK Invest actually using it as part of their investment dashboard, which is what they use internally to make decisions. I use dashboard as a catch-all phrase. But what I was thinking about earlier when I was surfacing what I was going to do for the show today, my first thought was, when is this going to be a sidecar? Kalshi and Polymarket market's going to be a sidecar on Bloomberg terminals. If there's anybody out there that works as a professional investment guy and has access to Bloomberg terminal, I don't suppose you could let me know whether or not these prediction markets are already present on Bloomberg terminals, or if it's an option, because I'm sure that each trader has the ability to customize whatever their user interface looks like. So if you don't have it on there, would you do me a favor and go check in settings on the Bloomberg terminal as to whether or not you can surface to your screen Kalshi and or Polymarket? If you do that, I'd really appreciate it. Okay. So Strategy added another 4,871 Bitcoin for $330 million. Its holdings now near 767,000 Bitcoin. Well, let's get some vital statistics here. Strategy added Bitcoin to its treasury over the past week at an average price of roughly $67,718 per coin, spending $329.9 million. And that's according to this morning's filing. The purchase brings the total holdings to 776,970 Bitcoin, acquired for $58 billion at an all-in average cost basis of $75,644 per coin. At Bitcoin's current price near $69,120, the entire position is underwater by roughly 8%, or about $5 billion in unrealized losses on paper. So they bought more Bitcoin. It's not a whole huge amount of Bitcoin, but I'm actually happier that he's buying less amounts of Bitcoin now than the massive amounts of Bitcoin that he was taking away from the public before. So let's move on to Claude. Claude Code cracks FreeBSD inside of 4 hours. For about, by the way, this is notebook.check.net. For about 4 hours, Nicholas Carlini worked on FreeBSD supported by Anthropic's Claude. Carlini states that Claude performed a large part of the work autonomously, from identifying a vulnerability to finishing the exploit for it. God, good God. So, security researcher Carlini, supported by Anthropic's AI model Claude, identified a vulnerability in the FreeBSD operating system and exploited it within 4 hours. Claude was also capable of creating a working exploit, and the vulnerability has been reported as CVE 2026-4747. This is the important part. The FreeBSD operating system, this serves as a foundation for a wide variety of products across many technical sectors. Companies such as IBM, Nokia, Juniper Networks, and NetApp use the system to develop their infrastructures. Parts of Apple's Mac OS are also based on components from FreeBSD, which took Claude 4 hours to find a vulnerability and exploit. In the entertainment industry, elements of FreeBSD can be found in the operating systems of PlayStation 3, PlayStation 4, and the Nintendo Switch. Additionally, large-scale network-oriented services like Netflix and WhatsApp rely on the architecture of this system. The vulnerability is located in the RPC SEC GSS module, which is responsible for Kerberos authentication on NFS servers. The exploitation utilized the so-called stack buffer overflow. In this process, data is written into a memory area that is not large enough, which can cause adjacent memory areas to get overwritten. Information regarding an upcoming model from Anthropic named Mythos suggests that such exploitations can take place in even less time. The speed at which vulnerabilities are being identified and then directly converted into functional exploitations is changing the dynamics of IT security. While traditional patch cycles, the period between a security advisory and the installation of an update, can often take weeks in corporate environments, automated exploitation is already operating in the range of hours. So why do I even bring this to you on a Bitcoin-based podcast? Well, because everybody is losing their mind over quantum and it's going to kill Bitcoin. Even though that if it kills Bitcoin, it kills the entire web. Because, all the banks, nuclear codes, all this stuff is all cryptographic in nature. Now, there's this argument coming out of the quantum's going to kill Bitcoin fudsters like Nick Carter that says, well, we don't worry about the rest of the world. We're only worried about Bitcoin because the rest of the world can upgrade overnight. No, they can't. Circa 2000 and 1999, where every idiot was losing their mind about how the hell they were going to upgrade for the 2000 switch. And a lot of people did upgrade, but not everything got upgraded. There was a whole bunch of systems that did not get upgraded. And guess what? Well, first of all, everything was fine, but they couldn't upgrade. They didn't have the manpower to upgrade. And yet somehow or another, all these banking systems and the entire World Wide Web is going to be just like flipping a switch, according to Nick Carter? I don't think so, man. And the second reason I'm bringing this to you is you need to know, because FreeBSD is fucking everywhere. It's all over the place. It's in your kid's PlayStation, and that shit's connected to your home internet. Just be aware, that this stuff is going on. And the third reason is this gets worse. This gets a lot worse. And the fact that we seemed like, at least in Bitcoin land, we seem to be solely focused on the threat of quantum computers. We're not as much focused on, like, this is what Samson Moe was talking about at the beginning of the show. We're becoming so enamored and so enthralled and so distracted by quantum, which isn't even really here yet. It's not really here. There are people that have quantum computers that have an operational qubit. There's a computer out there that maybe has 2 or 3, and they are in those qubits are in what's called coherence, which means that they can actually work together, for lack of a better term. They don't have anywhere close to what it takes to be able to do things like factor a number like a 6-year-old. Be that as it may, we live in a land where we have AI. And in 4 hours, Claude is able to break a major component of many, 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 many things. And yet we're still distracted by the quantum FUD. This is why I express to you my desire for everybody to operate under the most extreme caution when listening to people like Nick Carter. In fact, stop listening to Nick Carter altogether. The man is in more need of a zoot suit than anybody else on the face of the planet. Now, North Korea hackers spent 6 months infiltrating Drift before executing a $285 million exploit Vismaya V from Decrypt. Solana-based decentralized exchange Drift Protocol said on Sunday the attack that drained roughly $285 million from the platform was a structured 6-month intelligence operation by a North Korean state-affiliated threat group. The attackers used fabricated professional identities, in-person conference meetings, and malicious developer tools to compromise contributors before executing the drain, the protocol said in a detailed incident update. Quote, crypto teams are now facing adversaries that operate more like intelligence units than hackers, and most organizations are not structurally prepared for that level of threat. Michael Pearl, VP of Strategy at blockchain security firm Cyverse, told Decrypt. Drift said the group first approached contributors at a major crypto conference last fall, presenting as a quantitative trading firm seeking to integrate with the protocol. Over the months, the group built trust through in-person meetings, Telegram coordination, onboarded an ecosystem vault on Drift, and made a $1 million vault deposit of their own capital, only to vanish with chats and malware completely scrubbed when the exploit hit. The deck said the intrusion may have involved a malicious code repository, a fake test flight app, and a VS Code cursor vulnerability that enabled silent code execution without user interaction. Drift attributed the attack with medium to high confidence to UNC 4736, also tracked as Apple Juice or Citrine Sleet, the same North Korean Slate-affiliated group that cyber security firm Mandiant linked to 2024's Radiant Crypt Capital hack. Drift said that the individuals who met contributors in person were not North Korean nationals, noting that DPRK-linked actors often rely on third-party intermediaries for face-to-face engagement. On-chain fund flows and overlapping personas point to DPRK-linked actors, according to incident responders SEAL 911, though Mandiant has yet to confirm attribution pending forensics, the platform noted. Security researcher Tavano, one of the experts whom Drift credited for assistance in identifying the malicious actors, suggested the exposure extended well beyond this incident. In a tweet, the expert listed dozens of DeFi protocols alleging the DPRK IT workers built the protocols you know and love all the way back to DeFi summer. Let's pause. In a tweet, the expert listed dozens of DeFi protocols and alleged that DPRK IT workers built those protocols that you know and love all the way back to DeFi Summer. That's Sushi Swap. That's DeFi Summer. He's talking about Sushi Swap and a whole slew of other ones that were built. If you're in DeFi, get out. Get out right now. Sell it. Whatever tokens you have, sell it for Bitcoin and just sleep easy at night. So please stop running after the easy money because you're just going to get freaking hosed. That one sentence right there sounds really bad for the entirety of the DeFi ecosystem at this point. Quote, Drift and Bybit highlight the same pattern. Signers were not directly compromised at the protocol level. They were tricked into approving malicious transactions. The core issue is not the number of signers, but the lack of understanding of transaction intent, end quote. He said that the multi-sig wallets, while an improvement over single key control, now create a false sense of security, introducing a paradox where shared responsibility lowers scrutiny across signers. Quote, security must shift to pre-transaction validation at the blockchain level, where transactions are independently simulated and verified before execution, Pearl said, adding that once attackers control what users see, the only effective defense is validating what a transaction actually does, regardless of the interface. On developer tools, as an attack surface, Lavid, I don't know who Lavid is, Lavid said the assumption has to change from the ground up. Quote, you got to assume the endpoint is compromised, he told Decrypt, pointing to IDEs, code repositories, mobile apps, and signer environments as increasingly common entry points. Quote, if these foundational tools are vulnerable, anything shown to the user, including transactions, can be manipulated, the expert said, noting this, quote, fundamentally breaks traditional security assumptions, leaving teams unable to trust the interface, the device, or even the signing flow. Okay, my read on what these security researchers have said is that DeFi is fully compromised at this point. All of it. There's nothing safe anywhere in DeFi land. I highly recommend that you at least consider getting out of DeFi and never going back until at such time somebody somewhere's got a better head on their shoulders about how to go about all this stuff. And if you want to, day trade your way into oblivion after that, hey, man, shoot, go ahead, dude, knock yourself out. Right now, this looks to me to be a one-way street to a complete draining of most DeFi platforms, because if it is true that a lot of these platforms were actually built by the very people that intend to hack it, there's kind of not a defense. And that wasn't exactly what happened to Drift, but it's that sentence. It's that sentence up here that says, what do you say it was? North Korean IT workers built the protocols you know and love all the way back to DeFi Summer. Now, of course, you'd actually have to verify that that's true. But I think in this particular, basket of shit that people find themselves in, it's a better assumption that they did do it, and to get your money out and watch from afar. Hey, if it doesn't catch on fire and burn completely to ash, I guess good. And maybe you can get back in or whatever. But right now, dude, there is nothing about the DeFi ecosystem in its entirety that is at all trustworthy. Please get out, and just buy Bitcoin. Okay, that's the end of the show. That is Monday. Monday's episode is in the bag. I do appreciate you being here. Again, please consider a 5-star review on Apple Podcast and Spotify. It's a lot of platforms that reach for Spotify to see what kind of podcast or episode they might want to surface in their own app. So both of those, Spotify and Apple, they could do a lot for the show. It could really do a lot for the show. I was looking at, I got a service that kind of monitors what's going on with my podcast. as to like, am I on charts? Did I get a rating? What's my visibility? Where am I ranking? All kinds of intelligence. And then I match that up with other analytic, and it's pretty much spot on, right? That's how I know I'm in the top point or top 0.7% of podcasts worldwide. I saw a bump this morning and I didn't know why, because generally speaking, I mean, I don't do episodes on the weekend. So I shouldn't have gotten better visibility over the weekend. And sure enough, Monday morning hits, I wake up, I look at my analytics, and boom, I've got a sizable bump in visibility, and it launched me from 0.8 to 0.7% of all podcasts. And now I figured out why. It's because that dude gave me a 5-star review on Apple Podcasts. That's sort of the inner workings of how the whole podcast ecosystem works, because it's more interconnected than I think a lot of people know. Even ratings on YouTube. I have a YouTube channel. It's I Loathe Schmidt, because I've never changed it. And I do need to do that. I need to change it over to something that's more brand worthy, but my RSS feed populates into YouTube. And even people will look into YouTube, like other platforms will look to YouTube and YouTube ratings to figure out what they want to surface in their own podcast app. And that's the thing, is that YouTube has a whole podcast thing. I don't really want to get into it. It's sort of, it's not exactly separate, but it's kind of separate, and whatever. It's all confusing. But these things talk to each other. And that's why these ratings are so important for shows. If I want to get, if I want to be able to stay in the top 1%, this is how it's done. It's not just showing up day after day for 8 freaking years. It's not just doing all the work it takes to build a show in the mornings. I put these together right when I wake up. I mean, it's like I get up at like 5:30, 5:15 a.m. And next thing I know, I've got like 5 minutes and 4 sips of coffee under my belt, and I'm looking at what's going on in Bitcoin. And I put the show together so that you guys can have it as early as I can get it out. Those 5-star reviews, that just makes me want to do it even earlier. Now I want to get up at at 5. If I get another 4-star review or 5-star review, maybe I'll get up at 4:45. And I don't know. Whenever I do get up, I will see you on the other side. This has been Bitcoin and I'm your host, David Bennett. I hope you enjoyed today's episode and hope to see you again real soon. Have a great day.